Yo, what's the dealio, y'all? You already know I got a straight banger for you today, all right? In this video, what I want to talk about is I want to talk about a very simple trading strategy, right? I'm going to go step by step, no matter where, if you're a beginner, if you are intermediate, I'm going to break down exactly how you can print 15 to 20% on a single trade every single day. All right. I'm a firm believer that you can make six figures a year in the stock market and stock options off of one, maybe two trades a day. All right. You just got to know how much you have to make per day, how many trading days are in a year, and what strategy, right? What type of trading strategy will get you there and get you those results. All right. If you guys are just tuning in, be sure to like this video and subscribe to this YouTube channel because every single day we changing people's lives in the stock market. All right. So what I'm gonna do is I'm gonna go to the charts. You already know I like the charts. I like focusing on technical analysis, right? I don't like focusing on depending on the news. The news can help you, right? It can help a stock go in a direction. But I like to focus on the charts and technical analysis because that is where a lot of money is at. All right. So today I hit SoundHound, right? I hit them for 15% right here. It shows like 13%, but I hit them for 15%, right? So what I'm gonna do is I wanna break this down for you guys so that you can see exactly a consistent strategy that shows its way in the charts, all right? Now this is dealing with fair value gaps. If you don't know what a fair value gap is, basically all it is it's an imbalance in the charts on a different time frame, on certain time frames that the stock has not tested yet, right? So if you see it's a 3-bar sequence, and I'm gonna show you guys right up in here. It's a 3-bar sequence. All you do is you take the high from the first candle, and then the second candle usually goes up, and then you take the low of the third candle, and then what that does is it creates a gap, right? Creates a gap, and a lot of times the stocks will come down to that gap, right? And then it'll either break through or it'll either come down halfway, bounce, and then go to the high, right? So I'm gonna show you guys that right now. So let's share the screen. All right. Go. All right, here we go. All right, so right here, this is Adobe, but I'm gonna go to SoundHound because that's who we traded today. All right, so right here, we got SoundHound, right, y'all? So check this out. First things first, yesterday they had a 3-bar. When I saw this last night, I was like, okay, I'm gonna pay attention to this stock, right? And if we do break above this level right here, then we could really have a nice bullish, a bullish move, right? So then we go down to the 15-minute, and so here's what happened. All right, this is a simple trade. So right here, so as we see in the first 15 minutes of the market open, we have this candle right here, right? This is a 3-bar. It's a bearish 3-bar, but there's even amount of buyers and sellers in this first 15 minutes. That's why you got this body and you got wick up to the upside and a wick up to the downside. All right. So it made a low and it made a high, right? First things first, I saw that. So it came down, came up, came down, and then it went all the way up higher, right? So now what we're going to do is we're going to go down to the 5-minute real quick. Okay. Sometimes I like to come down to the 5-minute time frame just to get my entries a little bit better, right? Because I can see a little bit granular. So I saw this right here. So when I saw SoundHound, it had came up and then it had came down, right? Once I saw this failed 2 down right here and I saw it coming up, I was bullish, right? And we was on a 3-bar yesterday. So I was bullish. So I wanted to wait a little bit, right? So then I had saw the stock around this area right here, right? Around this area right here. So what I did was once I saw it break past this orb level right here, okay, this green line, I'm going to put orb level. I'm going to put orb level, right? So this is the top of the 15-minute orb right here. So we got orb level. All right. So once I saw the stock break above it, it did it decent. I was like, okay, cool. I knew it was going to come and retest here, right? And there was 2 reasons why I knew. Number one, it broke above it pretty high. So the stock has to come and retest first. But then we got this candle, we got this candle, and we got this candle. What this created was that fair value gap that I was talking about, right? So watch this. So right here to right here, it created a gap, right? You see the top of this wick and the top of the bottom, the top of this wick and the bottom of this wick, right? I said a fair value gap is a 3-candle sequence. You need 3 candles to have a fair value gap, right? 2 candles create the gap, and then the middle one is where the stock comes in and it liquidates it, right? So came up, this stock created the top of the gap, boom. So I knew it was going to come down to around here, right? So I saw this candle right here, came down, bounced up. Once I started seeing this candle became a 3 candle and it broke above right here, that's where I took my entry, right? So I took my entry right at the break of the previous candle right there, okay? Once this candle came down and then it came and it bounced up, that was 2 bounces, right? Bounced right here, and then it came down and bounced right here, and then it pushed up. Once it got right there, that's when I took my entry, right? So I took my entry right there, all right? Came into this fair value gap. It had to test the fair value gap, and then it bounced up, right? Boom. Took the entry, and then I was able to get it from here, and I rode it up to this candle, and then I rode it up a little bit higher, right? And then I took my exit. Took my exit right there. All right. Exit. Bang. All right. Simple as that. And I closed a position at 15%. I got my screenshot at 13%. I don't always get my screenshots, to the T, right? Because I want to actually secure my profits. I don't want to just take a photo, for YouTube and Instagram. But this was the setup right here, right? We had a 15-minute orb. It solidified. It broke above the orb, and then it created a fair value gap as well. And then what happened? It came down here and it tested this fair value gap, started to bounce up. Once it pushed up, took my entry. Less than 10 minutes, I was in there. I hit about 15% and I was good to go. All right. That is how efficient that we are able to trade. If I would have saw this earlier and I would have saw it off this failed to down, I would have took entry right here. Right. But it's all good. Saw right here. It was getting ready to get primed. I could have got in right here, right? And then it would have came up right here and it came down and then it would have went higher. But I like the entry that I got because my drawdown was very minimal, right? My drawdown was very minimal and I got in on the pullback, right? I always say enter in on a pullback. Don't get in a trade if you don't see a pullback yet, right? Because if you don't see a pullback and you just keep seeing green and you get in the trade, what's going to happen is you're going to experience the pullback. So you may think that, okay, it's going to keep going up. I'm about to take this entry, right? You get in on that new candle and then what's it do? It pulls back. It yanks back. Now you down 15% and you're like, dang, I'm about to get out. This hit my stop loss. And then what happens? It ends up going in your direction. It was probably a fair value gap somewhere that you didn't see and you didn't chart out, right? Or you just entered in too early or too late, right? You entered in too early for you. You entered in too late with the trend and the stock needed to pull back and retest the level first before it ended up going higher and you didn't know where the levels were at. And so what ended up happening was you just had to take that L. Right? This happens every day to people because the stock market is designed to take money away from you, right? Stock market is designed to take money away from me. So don't let that happen. Don't be I don't want to say a victim, but don't be a victim, right? Like also, I always say the more you study, the less you worry. Because when you understand what's going on here, you ain't going to be worried about this stuff and you're going to be able to take your trades, make your money and go live your life. All right. So very simple. Right, that was a simple trade, 15%, and we got up out of there. I didn't play too many games in the market today. Volume was kind of low, and then a little bit later, market ended up selling off. Right, so Jerome Powell, he was saying that the labor market is weakening. Young people aren't working, getting jobs, stocks are overvalued. And what does the market do? That's how it responded. Things started coming down. All right, just is what it is. But when we're looking at the technicals, we didn't sell off and break no crazy support levels. So we could recover tomorrow and bounce back end of the week. We gonna see what happens. You just gotta make sure you're studying the charts and then you doing what you gotta do. All right. So that's today's video, man. I hope that this helps you guys. I hope that it made sense, and I hope that it helped something click. All right. So like I say in every single video, I want you to say it with me. All right, y'all. So real quick, before we go, listen, y'all, we got to talk about psychology real quick. You can't be afraid to lose money. You can't be afraid to lose money. You gotta have an amount of money that you're willing to lose in a trade so that you can actually make the money, right? You be up 5%, and because you're scared of losing more money, you end up getting out of the trade. And there's no real reason why you got out besides fear, right? You down 5%, and what happens? You get shooken out, and then the stock goes in your direction. I cannot say this enough, right? Stop being afraid to lose money. What this doing is it's making you get out of trades early. It's making you get out of trades early. And if you are afraid of losing the money, what that's saying is you over leveraged inside of your trade. You over leveraged in your trade, because you should not be so afraid of losing the money that you get out of a trade early and you miss out on a potential 50%, 100% trade, all because what? You scared? No, you got to stop over leveraging. You should not be tripping about a L that you take. That means that you over leverage. You should be able to take a loss and be like, you know what? It is what it is, right? On to the next one. That's what it should be. You got to work on that relationship with money and work on how much money that you're leveraging in your trades. All right, this stuff is serious, y'all. So please, 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 I just wanted to say that real quick. Stop being afraid to lose money. You're going to lose money. You got to embrace the fact that you're not going to win 100% of the time, no matter what. The best traders in the world are the best losers. The best traders in the world take L's. It's not about being perfect. It's not about always having a green day. That's not the reality of what this is, right? The reality is you're going to take some L's, you want to manage your L's, and you want to make sure your wins outweigh your losses. And you got to master your personal psychology, and you got to master your risk management. You got to be willing to say, I'm not going to over leverage on this trade no matter how much I want to. And you also want to always think about, what if this trade does work out? How many times have you got into a trade and you nervous because you like, I don't want to lose money. What if this trade doesn't work out? You don't get in the trade and then it runs crazy and you like, dang, I could have made X, Y, and Z. Or you was in the trade, right? It pulls back by 10 cents. You get scared, you get out. And then what happens? It goes crazy. And you like, dang, if I would have stayed in, how long does it have to be for you to keep saying, dang, if I would have just stayed in, for you to actually stay in the trade? How long does it gotta be? You got to start thinking about this stuff, y'all. You got to master your personal psychology, man. This is real life. This is a life-changing opportunity in the stock market every single day. Every single week, they're going to give us some opportunities to change our lives and go make 1,000, 800, 700, 600% returns. These opportunities present themselves every single day. But you got to be willing, right, to surrender to the process and to the journey. So I just wanted to say that, y'all, right? Tap in with your psychology. Do what you got to do. Schedule a one-on-one. Join the trading community, right? And just do the research on your own so that you can master yourself. Because the opportunities are there every day. All right? So I hope that helped, man. This was like a 2-part video, but I just wanted to say this, right? So like I always say, make sure you get up out of your head and go get into the world, because your head is a dangerous place to live. All right? And also remember, y'all, the more you study, the less you worry. All right. Y'all stay smooth, man. I'm going to see you guys on tomorrow's video. Peace.